Hi guys, and welcome to this week's forecast, where we're going to look at what is it that we have to anticipate in the market, where we're likely to take positions from, and also generally the outlook of what I think is going to happen in the markets. So before we do that, right, before we continue, we're just going to look at the calendar. So the calendar is your first most important look out for what's ahead in the coming week. So tomorrow, we don't have much fundamentals, as you can see. Monday, the 23rd of October, we don't have literally no fundamentals tomorrow. Only New Zealand Labor Day, which is a holiday. But yeah, there could be one-star fundamentals, but as you all know from my filters, I don't usually look at low impact fundamentals. I only start from 2-star, 3-star high impact news. Coming to Tuesday, we've got SEF's PMI and Bank of Japan core CPI, and then heading into the London session, we've got Euro PMIs, and then we also have Pound PMI and manufacturing PMIs from England. And then heading into the New York session, we've got ECB president speaking. Then we also have SEF's PMI from the United States. So Tuesday is actually a very good day to trade, looking at what is on the calendar. Then heading into Wednesday, we've got building payments and new home sales from the United States, and then crude oil inventories. And then I think the most important one for Tuesday, CPI for AUD and Bank of Canada rate decision. And then later on towards New York close, we've got Powell speaking. Those are your most volatile fundamentals for Wednesday. And then Thursday, we've got Reserve Bank of Australia also on the calendar, official speaking there. And then we've got Euro on Thursday. We've got ECB on the calendar, rate decision for ECB on the calendar. So that's going to be quite a huge volatile day. We also have GDP and initial jobless claims for the United States. And then Friday concludes with core PCE index, producer price index for the United States. That's going to give us a guideline in terms of the upcoming CPI release for the next month. Producer price index literally guide us in what to expect in terms of the inflation. So that's our calendar for next week. So we quite have a very enticing calendar in terms of volatility, right? So you really need to be on top of your game when you are trading this coming week. You have to know the time. You have to know where price is in relation to the fundamentals that are going to be released, especially Thursday, right? For the less informed traders, I would advise you sit out Thursday if you're not really that well informed on how these fundamentals affect price. So yeah, that's the calendar for the upcoming week. And then looking onto the charts, right? Just to recap what happened previous week in relation to the forecast, you can see most of the currency pairs and dollar index included, they did respect most of the focus that were outlined last week Sunday. And you can see, just a recap on dollar index, the daily fair value gap, right? Let me just go to the daily. See this daily fair value gap highlighted from last week Sunday is still being respected in terms of price. Price is still respecting this fair value gap range, your daily bullish fair value gap coming in right at the equilibrium level of this expansion here from a week from 2 weeks ago. So yeah, we can clearly see that dollar still pointing to the upwards. We still have dollar pointing upwards, though we need positive fundamentals to support that, because we saw what happened on Friday. Was it Friday or Thursday when Powell was speaking? He literally smashed the dollar to the downside, back into fair value. Fair value for what? For your long entries. I think it was Thursday when Powell was speaking. Let's just confirm that. I think it was Thursday, the 19th. Let me just confirm that. Right. 6 p.m. on Thursday, we had Powell speaking. He's the one who pushed the dollar to the downside here. So you just have to be aware of that. He pushed dollar to the downside. Uninformed traders here, that have been looking at the bearish dollar. Yet it was just re-accumulating in fair value for what? For long entries. You can see our price dropped from the time Powell was speaking. That whole hour, price literally took out the stops, the weekly lows, and then it pushed to the upside. You see, that's a trend that you have to be in a position to see. As you can see, the red lines, those are from last week, my anticipation of where dollar was likely to trade to. So the discount range on dollar is still intact. So we're looking at prices from 105.92 all the way to 105.65. Those are your discount range. And in terms of discount areas that we have for your day trades, we've got this old low here from last week. That's our low from last week. Unfortunately, you can see there's no expansion that we can really use in terms of having new fib levels that we can mark out on the chart. So regarding dollar, right, price is still inside the monthly fair value gap, and price now has mitigated. It has traded the weekly bearish order block, but the reaction does not really look much of a impact. You see, price reacted to this bearish order block here on the weekly chart, right? The daily bullish fair value gap is still being respected. If we go to your H4 chart, the daily fair value gap is being still respected. So that's a sequential monthly, weekly, and bullish and daily bullish institutional order flow. So yeah, we will be looking for longs, right? We'll be looking for longs on dollar index. Specifically targets, I think we're focusing mainly on 107 price point all the way to 107,400. Those are your targets when it comes to dollar index. This high here hasn't been mitigated, hasn't been traded to, right? For a asset that we are looking for bullish movement, this high here is vulnerable. Even 2 weeks ago, the high from 18th of October, that high is vulnerable. We're talking of 106.56. So yeah, for price to rally to that those levels, right? When you're looking at, say, Tuesday, right? When you're looking at Tuesday in terms of the calendar, these sales PMIs coming in just after New York open, they have to be positive. But if they are negative now, it's a case of reacting to what's happening. If those fundamentals come out negative, define a premium area. That is, if price is in a premium area. Like for instance, we've got this bearish fair value gap here, right? Say on Tuesday, price is trading at that level there. And then you've got sales PMI from the United States coming out negative. That's definitely going to put pressure on dollar index, right? So by now, guys, you should understand that my focus is more of an analysis of what to expect. I'm not really going to give you like exact price points. Though if I'm using feed tools, yes, I can give you price points like what I did last week, say 105.92, 105.77. Those are your ideal long entries, right? But it's a case of reacting in anticipation of what the market is doing. If this sales PMI come out positive, right now the focus is 49.9, which is lower than last month release, right? September release. If the sales PMI come out positive and dollar is trading in the daily fair value gap, right? Then you anticipate a strong expansion to the upside. You see, that's how you react to a fundamental release. Yes, some are going to say that, but Ivan, it's like instant. I won't have time to react. Whenever a fundamental is released, right, especially high impact news, there's always a phase, there's always a time period during the initial release when there's either a reaccumulation or a redistribution. A reaccumulation for an asset that is bullish, and then redistribution for an asset that is bearish. And reaccumulation is going to happen in discount. Redistribution is going to happen in premium. You see, it's those things that you have to understand and have a clear mindset towards that if you are trading high impact news. Price always look to mislead the uninformed trader out there to go the other way, when in actual fact, market is trading to the upside. If you remember last week, let's go to last week's calendar. Let's just go to last week's calendar. I need to highlight what I'm explaining here. So we had, I think, PPI. Yeah, I think it was PPI. No. It was a US fundamental. It was a US fundamental. The Philly manufacturing index, right? Initial jobless claims came out under 98K. That was a Thursday. And then the Philly Fed manufacturing index came out negative. Then we also had existing home sales coming out positive for the dollar. But this manufacturing index from Philadelphia Fed took precedence in the market. Dollar actually went lower that Thursday, right? When I go to the hourly chart on Thursday, regardless of those positive initial jobless claims, which are a weekly release, guys, they're not going to have much impact on an asset. You can see here the fundamental came out. What time was it? Past 2. Past 2. So we're looking at right. Okay, let me go to the 30-minute chart so that we can clearly see. That should be 3:30 right here, right? So this is the initial release. Yes, on the calendar it's 3:30, but on the chart it's 3:30. On the calendar it's 2:30. Look at that calendar, that candle there for 2:30. Initially, it went all the way up, or like almost 15 pips, right? So if you are trading dollar index at that moment in time, you know that this move to the upside, the initial jobless claims, they're not going to take precedence more than the manufacturing index. Manufacturing index is going to hold more emphasis to where the asset is going to trade to. It's got a higher impact. Let me put it that way. It's got a higher impact than the initial jobless claims. So the initial release came out, dollar pushed all the way up to the upside. What was it doing in this type of price action? It was redistributing in fair value. Price was redistributing in fair value here, right? Fill up the gap and then eventually dropped to the downside. You see, that's how you have to look at the market. This initial move to the upside, your redistribution phase, you see, the protraction phase to the upside, New York open, this protraction phase here to the upside into fair value. Even if you're scalping, guys, even if you're scalping, you see, let me show you. Even if you're scalping, you see here, this is the release. Where did price redistributed to? Up into this old low here. Rebalance, and then market pushed to the upside, and then Powell came in, did the same thing, market redistribute, and then push to the upside. So your anticipation, your trading skills as a trader, you should be in a position to react to price in that way. So looking ahead into the coming week, I'm still maintaining that dollar should push to the upside, right? Dollar, I still remain a bullish dollar from these levels here that I've highlighted: 105.92, 105.77, and 105.65. The only time I'm going to change my weekly bias on dollar is if we break below 105.54. Then for that coming week, I'm going to turn bearish. I'll redefine my premium areas where I should be looking for price to find resistance and push to the downside. So that's on dollar. When we go to Euro USD now, right? With Euro USD, it's the opposite, right? On Euro USD, we're talking of the opposite of dollar. So you can see price has hit a monthly key level, an old low. Price traded to an old low on the monthly chart. Monthly fair value gap is the possible draw on liquidity. The monthly fair value gap is a possible draw on liquidity, but that now result in a weaker dollar if we are going to target this monthly bearish fair value gap. So what we could really see is price head for the daily fair value gap. Price should trade to a daily fair value gap, which is now providing resistance. Right now, the daily fair value gap, this level here, is providing resistance to price. So what you need to look at is price to take out the previous week's high. When you go to H4, this previous week's high here, you need price to take out that old high, right? Once this high is taken out on Euro USD run-off stop, then price would have rebalanced this area here, right there. You see, price would have rebalanced this inefficiency, which is still intact. So this previous week's high, we've got a liquidity pool of buy stops above. So we need price to trade above for a move to the downside, right? We need price to trade above for a move to the downside. So you need to be looking for something like a 4-hour market maker sell model, right? 4-hour market maker sell model on Euro USD for shorting opportunities. And on the calendar, right? On the calendar, your anticipation for expansions on Euro, they're going to come right Tuesday morning, 9 a.m. We've got a whole bunch of PMIs from the Eurozone. We also have later on during the day sales PMI from the United States. So those are the times you need to be looking at Euro USD in regards to expansion, where the market is likely to go. We need a guideline. We need a directional bias on lower time frame. But as it is, I remain a Euro bear. Market should look to go to the downside on Euro USD. I'll be hunting for shorting opportunities from levels of 105.96, 106.0. All right, those are the levels that you have to look for shorting opportunities. For your scalping, you see the current price action here. It's just that we're not going to be trading tomorrow. There's just a blank calendar. We're not going to be looking. Obviously, we have to take note of the daily close. but this high here coming in at 1.061 is crucial for price. We need price to see taking out that old high and then trade to the downside. As for gold, the price action for gold now, there's too much uncertainty on what's happening in the Middle East, and you can see how price rallied in the precious metal last week, and tension seems to be escalating, and the more those tensions escalate, the more Iran gets involved, then the precious metal is likely to reach for $2,000 an ounce. But that's about it when it comes to the precious metal. I don't have much to add or subtract. Then Aussie dollar target was reached for last week. You can see there, price traded into our daily fair value gap, and I still expect price to trade below 0.627, right, in the coming week. If I'm a dollar bull, then I expect Aussie dollar to trade to the downside. So this daily fair value gap here, you see now what you have to do as a trader. What you have to do is make sure you update your price action. From last week, we now have a high probability bearish order block, right? So that's a fair value gap, and then that's our bearish order block. A bearish order block that's accompanied with a fair value gap becomes high probability. So that's our expansion from last week. Expansion from premium targeting discount. So you can literally have your fibs from last week's high to last week's low. Market showing us its intended directional bias. Price moves to the downside from equilibrium all the way to the 70% retracement level. That's your premium array, right? That's your premium range, sorry. And what premium arrays do we have inside that price action? On the 4-hour chart, we've got these relatively two equal highs, right, coming in at 0.6355, and then we've got the fair value gap and ultimately the bearish order block. Those are levels you have to anticipate price to find resistance for a push to the downside, targeting 0.6267 for the week. So expect Aussie dollar to create another low in the coming week. Same applies with NZD USD. NZD USD is one that ultimately reached the target. Target was 0.5857. You see, price traded below 0.587. So literally the sell stops have been liquidated, and now we're looking for price to continue going to the downside. Where exactly should we expect the price to trade to? Looking about previous week's low, right? That's a target this year. Previous week's low, price should trade below that level there, and we're talking of price that's 0.58144 on NZD USD. That's an easy target on NZD USD. You also have to define your premium arrays where price is likely to find resistance for a push to the downside. You can see there I've highlighted fair value gap, old high, and then we also have another fair value gap right there. You see, so you're looking at retracement levels from the expansion that we got from last week. So last week's high, last week low, right? Our premium range is coming in right here. You see, there's our premium range together with our PD array matrix. We've got our premium array here, fair value gap 1 and 2, and then we also have an old high. What resides above an old high? We've got liquidity pull off buy stops, right? So if you're scalping, you're going to have to go as low as you can, the hourly chart and all that, to define your PDRA metrics. Pound USD, I'm still expecting it to trade below this level here, highlighted from last week. I still expect pound to trade below 1.2033, right? From which level? This daily fair value gap here, we've got a very high probability bearish order block. So we still need price to mitigate this level of price action for a push to the downside. When you go to our entry time frame, which is H4, we've got a bearish order block here from last week. That's H4, which is our entry time frame. So from last week, we've got that bearish order block. You can see how price came back to that order block. You see, now this is what you have to do. I gave you the focus, right, to say expect price to trade in the fair value here for a push to the downside, right? Price did not really actually reach for it. But what did price do during the course of last week? There's this order block here, right? That's our bearish order block, and then expansion to the downside. Since we've already highlighted that we are looking for bullish moves on dollar index, that in turn results in a bearish bias on pound USD. This expansion here, low to high, that's last week, high to low. Look where price traded to, a premium level, a bearish order block. Same applies when you look at this week now, right? When you look at the upcoming week, we've got the expansion from last week's high to last week's low. Market is showing us its intended direction that it wants to take. This expansion to the downside, that's last week. Look at the retracement. Where did the retracement go? 79% retracement level into a bearish order block. Then boom, market goes lower. So these levels still intact, right? If you go to an hourly chart, these levels are still intact. They're still in play. Expect shorting opportunities. 1.2164, 1.2174, 1.2184. What's at 1.2184? If you were trading it last week, you'd have already highlighted a bearish order block, you see? So you anticipate price to find resistance when it actually traded to that level. Looking ahead on Tuesday, we've got pound PMIs at 10:30. You see, got a whole bunch of pound PMIs, 3 of them, composite PMI, manufacturing PMI, and sales PMI, all high impact, right? The chances are very high. Price is going to be traded into a premium area. So what then do you need to see from the fundamental? You need to see negative PMIs for the pound, for pound to come under pressure while it's in a premium range. If those PMI come out positive for the pound, then don't expect this premium area to provide resistance. Price is going to keep pushing to the upside. It can happen that by Tuesday, 10:30 a.m., price will be trading downhill into this bullish order block. And then those PMI come out positive. Then anticipate the bullish order block to provide support, and then price push to the upside. So ahead in the coming week, I'm still looking for shorting opportunities from the daily fair value gap on pound USD. Then finally, we've got which one did I left? We've got yen, right? Yen, you need to be very careful with USD/JPY, guys. Right. So if you're not in a mentorship, if you are just someone who has tuned in on this live stream, I've got a mentorship that I run. And if you have more details, you can just inbox me or private message me on my Telegram or email address or via the website. So if you're not in the mentorship, for those guys in the mentorship, just be a bit careful on USD/JPY, because there's a Bloomberg report that came out, I think, last week in Japan. And chances are very high that we're going to get a surprise rate hike from the BOJ. Probably on the next meeting, we're going to get a surprise rate increase. For now, I think they're going to allow USDJPY to trade above 1.50. For now, I think they're going to allow, the Bank of Japan is going to allow USDJPY to trade around 150.00. They're still comfortable with it being up there. Anything further than that, yeah, then you're going to see this type of interventions here. 2 weeks ago, and then even last week, we had the same intervention. So yeah, that's pretty much about it for the coming week. I still remain a bullish dollar, still remain bearish pound, bearish euro, and bearish NZD USD. So yeah, that is pretty much about it, folks. And I wish you nothing but the best in the upcoming week. And for those in the mentorship, if you have any questions, don't hesitate to ask us. Just send a message on the group, then I can attend to it. So yeah, I wish you guys good luck and happy trading. Thank you.